Hi, I'm Brad Stroh from Bills.com, and I wanted to talk to you today about the confusing topic of debt consolidation. Debt consolidation can involve a lot of things and mean many different things to different people, from credit counseling to a debt consolidation loan to a refinance loan to alternatives like bankruptcy and debt settlement. What I want to do is share with you some thoughts and common concerns that people should think about as they evaluate their debt consolidation options. The first is typically monthly payment and also what the total cost of ownership is. We typically break the two options into a loan, which is most frequently a mortgage refinance, versus a service like a credit counseling or a debt settlement service. There's a second important consideration, which is credit rating impact. So each consumer should really spend time figuring out what they can afford to pay a month, also what their concerns are with respect to credit, and what the long-term total cost of that debt consolidation option would be. With a debt consolidation loan, which most typically again is a refinance loan, you must be a homeowner and have most frequently below about 80% loan to value. That option frequently has the lowest monthly payment, but it takes about 30 years to pay off that mortgage. It also is beneficial that it doesn't impact your credit very dramatically and typically leaves you in a pretty financially healthy spot, assuming you don't get back into debts once you've done your debt consolidation refi. If you don't own a home, or if your credit's not perfect, or if you don't have much equity in your home, you should evaluate two other options, including credit counseling or a debt settlement program. Credit counseling is a payment program where what they do is they set up a payment plan where you pay one payment to your credit counselor, they take those funds and distribute them to each of your credit cards. Typically, it'll be a reduction to your monthly payment, but not very dramatic, and on average the programs take about 5 years. The benefit there, though, is it won't impact your credit score, although while you're in your credit counseling program, you shouldn't expect to get large loans or home purchase loans or a refinance. A debt settlement program is one where your monthly payment is cut dramatically, and it's a very short program, usually about 2 to 3 years, where you'll save quite a bit of money. The downside there is your credit rating will be negatively impacted as you go delinquent on your accounts to qualify for the significant savings. If you're in severe financial hardship, you should always talk to a bankruptcy attorney and see if bankruptcy is an option for you. But in summary, if credit's a concern to you, you should first look at a debt consolidation loan or a refinance. If monthly payments are your primary concern, you should evaluate debt settlement. But for any situation, you should always do your homework, figure out the right solution for you, and then find the best provider for your needs.